Hey everyone, welcome to Primary Market Chatter, December 3rd week episode. This is the part 2 of the series. We did a part 1 yesterday, brought to you by Sunday Investing. If you have joined us for the first time, just want to highlight what we do is we talk about the primary issues which are coming in next week and review them from a fundamentals perspective and tell what we are planning to do. Just want to highlight that this should be a rather quick space because we have just three companies to cover and all of them are SMEs. We had already covered IGI and IKS, the two main board companies, and one SME company which is opening next week, i.e., starting tomorrow, which is Hams Bio. The review for which is already on the YouTube channel. So, अगर आपने YouTube channel join नहीं किया है, so you can join the YouTube channel. What I'm doing is I'm posting it above in the space in the pinned comments. So you can join the YouTube channel and listen to the review of the three issues which are closing tomorrow. Like two of them are closing tomorrow. You can listen to their review and basis that take a decision on whether you want to apply or not apply. I'm posting the comment, the link for that video of yesterday's space as well in the comments. Having said that, we'll probably just set up the agenda for the day and get started. As I said, this should be a rather quick space. So we'll be starting with a company called Nacdac Infrastructure, then moving to Identical Brains, and then closing with Yash High Voltage. It's a company which has a lot of chatter going for it. So we'll just talk about it. So that's the agenda for the day. Maybe with that, let me just quickly get started on Nacdac Infrastructure. The company is a construction company specializing in construction of multi-story buildings, residential, commercial, and institutional structures, and also has a Class A contractor license registered with Uttarakhand Peyjal Sansadhan Vikas Nigam Limited. In terms of the IPO size, it's a very, very small IPO, 10 CR IPO, all of which is a fresh issue. Please note it's a book-built IPO, i.e. there are going to be anchors in the issue, and the market cap is just 37 CR. In terms of the FY24 financials, the company did a top line of 36 CR and a bottom line of 3.2 CR. So it's coming pretty cheap at like, let's say 12 PE if you really want to compare PE, although the size is pretty small to actually compare PE. The LM is GYR Capital. So with that, Rohit, I understand I've already covered like 50% of the review, but I'll still give it to you to talk about Nacdac Infrastructure.
Thank you. I was trying to speak for 4 minutes. I'm going to speak for 2 minutes only now. So I'll make it very quick. This is not a very it's not a very inherently exciting issue. Obviously, it's going to be fine for listing gains and that sort of initial pop. But I was not very excited about this company for the medium to long term. So what do? They are yet another civil infra EPC player. They're mainly a subcontractor. They're just very, very small today. They do everything, or at least they claim to do everything across the sort of civil and structural work, whether it is construction of buildings, some electrical work, steel work, bridges, some road work. So they are capable of doing everything. But at least if you look at what they do, they largely do, some kind of new structures, which could be, say, a building in a school or some bus terminal or like some small office. So either that or they do a lot of very, very small, few lakhs to a few crore repair restoration kind of work. So they are small. At the end of the day, they are very, very tiny. About 65% of the business is government, 35% is private. Last year, they did about 36 crore in revenue, which was good growth over the previous year. But these are such small numbers that doesn't really matter so much. In the first 7 months of this year, though, they've only done around 13 crore. And whatever we say, however H2 heavy we want to consider these kind of businesses, it'll be difficult for them. Maybe they'll cross last year's number, maybe they'll not. But just doing 13 crore in the first 7 months is not that great a sign, I feel. So even if you assume they'll be flat year on year or slightly better, it doesn't leave a lot of, it doesn't look very exciting to me. The balance sheet is also fine. Receivables are in control, which is good generally in EPC space, but there has been decent amount of inventory built up. So you can't say the balance sheet is great or anything. They do have negative working capital. Again, to be expected in EPC, but it doesn't stand out. Like, say, if you take a Satlokar, for example, which is a much bigger version of this and who does a lot of prefabricated sort of buildings, which is a certain niche. They have an extremely strong working capital cycle. So you know that there is something, special about that company and the way they operate the company. This company just has a very small order book as well. I think about 80, 90 crore, very small projects with the exception of one or two 15, 20 crore projects, mostly very small projects. The company is coming at 12p, which is cheap. Today, EPC companies do get a higher multiple than this. So it will do well on listing. It will probably almost certainly list at 90%. Flippers will get every single lot
Rohit,
on
you are
listing.
breaking up for me a bit. Can you just see if you can be
Okay.
breaking up?
Can you hear me? Is it
Still
okay?
breaking. Tanmay, can
Okay.
you
I
hear?
mean,
Or you can try again. Just we'll try
take
again.
it. I'll just, I mean, I haven't changed anything, but I'll just complete anyway, just very little left. My sense is this company obviously will list at 90% because it's so small. And with this being book built, I mean, anchors will take away 3 crore. That leaves hardly 7 crore, post, in sort of float. It reminds me for some reason of this VL Infra, which was again a very small water EPC player, came, listed well, did a few circuits, and then people forgot all about it. And I feel very small EPC players, this is what will happen here. The scale is just too small. I think after 2 years, if this company does sort of become 100, 150, 200 crore, they reach some kind of scale and they're able to show some kind of differentiation, then might be interesting. If they have a really interesting order book, it might be interesting. But right now, purely listing gains, I will avoid. Maybe I will apply some retail if it is clashing with something else, and I'll apply retail for time pass. Will be absolutely humongous oversubscription just because of the GMP. So yeah, I mean, it's just a listing gain sort of thing, and I'm not interested in this company, at least right now, and I will look at it maybe a couple of years later if they do scale up.
Got it. I think it will be very similar to the 110 CR IPO we had, which was a book built IPO. Toss the kind, which is still like yet to open, right? So, very similar story, a very small size IPO, which is book built anchor. So there should be a possibility for price manipulation. I feel these issues would do like for IPO, they are rather good to give, like try your luck if you have free money, but otherwise not looking at them, especially because the size is so small.
And in EPC, if you, depending on what the price is, you can always find a peer at that price. If this lists at 90% and goes to say 22p, you'll find somebody at 22p. If it goes three upper circuits, goes to 25p, you'll find somebody else at that price, and then someone at 30 and someone at 35, and finally it'll end up at 15. So it is, you can create whatever story you want, but at some point people are going to forget about this company for the short term. Then hopefully the company will do well. They'll use the money. They'll do well. Then sure, maybe 6, 8 months, a year later, it might do okay. I just feel this is a very short term story only for now.
Got it. Moving forward, talking about the second company for the day, which is Identical Brain Studios. The company provides VFX services for projects such as films, web series, TV series, documentaries, etc. So a similar peer to a company like Picture Post Studios, which listed recently. The company has provided services in movies like Phone Booth and web series like Scam 1992, Rocket Boys, etc. In terms of the IPO details, again, a very small size IPO. IPO size of 20 CR, all of which is a fresh issue, at a market cap of 76 CR. In terms of the financials, revenue is 20 CR and PAT is 5.35 CR. So pretty decent. Like it's coming at a 14 PE, which I felt left a lot on the table. So I was decently happy with the issue per se. And in terms of the LM is a debutant, Socra MS Capital. They don't have any other listing on the SME or main board play as such, and this is their first IPO. So talking about the company, probably in the next 3-4 minutes we'll wrap this up. But yeah, as I said, seems like a decent, small VFX play. The company provides VFX services, CGI services, etc., and has a TPN audited VFX studio. TPN stands for Trusted Partner Network, and essentially it's a mandate which the VFX studios need in order to provide their services to movies so that there's no piracy, etc. issue with the company. In terms of the some of the big names, as I said, they have worked in Scam 90, provided VFX services in Scam 1992, Skelavone, जो एक दो और मूवीज थी बड़ी, रॉकेट बॉयज में किया था काम, उसके अलावा आर्टिकल 370 में उन्होंने वीएफएक्स का काम किया था. सो देयर आर फ्यू गुड मूवीज इन विच दे हैड गिवन वीएफएक्स प्रोजेक्ट्स एंड दे हैव बीन इंक्रीजिंग द वीएफएक्स प्रोजेक्ट्स. आई वाज सीइंग कि उन्होंने ना पिछले साल अराउंड 44 कंपनीज के 44 मूवीज या शॉर्ट फिल्म्स के लिए वीएफएक्स का काम किया था, एंड एवरी वर्क इज लाइक लेट्स से 30 days. 30 days का एवरेज ड्यूरेशन होता है. इन टर्म्स ऑफ द रेवेन्यू और वगैरह की बात करूं तो कंपनी का रेवेन्यू ना कंसिडरेबली बढ़ रहा है बहुत अच्छे से. दे हैव बीन डबलिंग द रेवेन्यू ईयर ओवर ईयर. इन FY 24 उनने 4 CR का काम किया था, और FY 22 में 4 CR का काम किया था, 23 में 8 CR किया, एंड FY 24 में 20 CR कर लिया. एंड जो बॉटम लाइन है वो भी काफी अच्छा इंक्रीज हो रहा है. इट वॉज 50 लाख रुपीज, देन वेंट टू 1.5 lakhs, एंड FY 24 was 5.34 CR. So it's been increasing quite decent. It's just that the segment in itself is slightly coldish right now, where the segment is not doing as well as earlier it was when there were a few listed players. And अभी क्या हुआ है कि काफी सारे listed players धीरे धीरे करके आ भी रहे हैं, which are rather small in size. वेरी सिमिलर साइज, यहाँ पे थोड़े से इससे छोटी साइज की एक और कंपनी आई थी, पिक्चर पोस्ट, विच हैड गॉटन लिस्टेड 3 months ago. इट ऑल्सो लाइक वेंट अप, बट अगर उसका भी देखो तो वो थोड़ी कंपैरेटिवली महंगी आई थी. फ्रॉम व्हाट आई रिमेम्बर वो 25 के पी पे आई थी, ये 15 के पी पे आ रही है. सो देयर सम वैल्यूएशन लेफ्ट ऑन द टेबल फॉर दिस कंपनी. इनके जो प्रमोटर हैं राघवेंद्र राय, ही हैज वर्कड इन डिजिकोर इन द पास्ट. डिजिकोर अगेन इज अ लाइक अनदर लिस्टेड वीएफएक्स प्ले. सो अभी ना 3 4 5 लिस्टेड कंपनियां हो गई हैं, फैंटम, डिजिकोर, बेसिलिक, पिक्चर पोस्ट, अब ये पांचवी हो जाएगी आइडेंटिकल ब्रेन्स. आई फील, बट वीएफएक्स में ना थोड़ा सा एक तो सेगमेंट is under slight pressure because of your trade receivables being high. And क्या है कि इस सेगमेंट में ना कंपैरेटिवली पेमेंट्स थोड़ा सा इशू रहता है. प्लस इसमें जैसे आप देखोगे तो इनका भी मोस्ट ऑफ द काम, 85% जो काम है वो डोमेस्टिक है, एंड ओनली 15% ऑफ द वर्क इज एक्सपोर्ट. सो डोमेस्टिक काम 85% है, राइट. सो उसमें भी ट्रेड रिसीवेबल थोड़ा कंपैरेटिवली पैसा बाद में आता है, बट इनकी बैलेंस शीट कंपैरेटिवली सही है, उसमें मुझे कुछ ऐसा इशू नहीं दिखा बहुत बड़ा. और जैसे अब मैं ये बात करूं कुछ 20 CR का ये क्या करने वाले हैं. सो फेल्ट ऑल ऑफ दोज रीजंस प्रीटी वेल. लाइक दे वर रेजिंग 7 CR फॉर वर्किंग कैपिटल, 3 करोड़ का वो एडिशनल कंप्यूटर्स वगैरह खरीद रहे थे, स्टोरेज सिस्टम्स खरीद रहे थे. उसके अराउंड 75 lakhs का एक लखनऊ में ऑफिस खोल रहे हैं, और 50 lakhs का अंधेरी के ऑफिस का रिनोवेशन कराना है. उसके अलावा जो डीआई का इक्विपमेंट होता है, डिजिटल इंटरमीडिएट कलर ग्रेडिंग बोलते हैं जिसको, उसके लिए इक्विपमेंट खरीदना है 3 CR का अंधेरी ऑफिस में. सो दे वर डूइंग ऑल ऑफ दिस, विच again is a play which a lot of these companies are doing. I feel in terms of like the play, it's coming at 15p, right? Almost all of the peers are at somewhere around 25 to 30p. So it should get that gain. वो आपको बहुत क्विकली दिखा देगा गेन, क्योंकि साइज भी छोटा है. तो वो या तो आईपीओ खुलेगा ही वहां पे, या तो नीचे खुलेगा तो प्रोबेबली फटाफट कवर करेगा, एंड देन इट विल बिकम स्लगिश व्हेन द ट्रेडर्स मूव आउट and the long term investors sit on the issue bus, is what I feel. So that is what my review was. I will apply if there is no other company uh, which kind of gets in is in competition with this. The only thing which I would do is that, very candidly, I will probably not keep it for the long term, because long term I'm slightly more like, there are so many of these companies which are forming, and end of the day VFX I feel is a artist play. उसमें क्या होता है कि आपके पास जो आर्टिस्ट होता है वो कैसा VFX, लाइक लोग यूजुअली ब्रांड के साथ कम एसोसिएट करते हैं, आर्टिस्ट के साथ ज्यादा एसोसिएट करते हैं. लाइक इट्स लाइक अ डॉक्टर, राइट. आप डॉक्टर को दिखाने जाते हो तो आप ये डॉक्टर के पास मुझे जाना है, वो किस हॉस्पिटल में बैठा है दैट इज स्लाइटली लेस रिलेवेंट. सिमिलरली यहाँ पे भी क्या होता है कि जो पोस्ट प्रोडक्शन वाले लोग होते हैं ना, वो बोलते हैं कि मुझे ये रॉकी से काम कराना है या फिर इससे काम कराना है. वो किस ऑफिस में बैठ के काम कर रहा है वो थोड़ा सा कम रिलेवेंट होता है. तो उसकी वजह से क्या है, कंपटीशन बहुत ज्यादा होता है. यूजुअली कंपनीज ना प्राइस पॉइंट पे ही प्ले करती हैं, लाइक कंपटीशन प्राइस पे ही होता है. सो दैट्स समथिंग व्हिच आई डोंट फील देयर इज अ बिग मोट. एटलीस्ट दैट इज माय वेरी रफ अंडरस्टैंडिंग ऑफ द सेगमेंट. So that is why I'll probably churn it if I get it, but I'll definitely apply if there is no company which is coinciding with this one. So that is what my review of identical brains was. Rohit, do you have anything to add, or we can probably move on to the last issue? Yes, high voltage.
And nothing to add.
Perfect. सो अब हमने सेकंड कंपनी की भी बात कर ली है. अब हम नेक्स्ट कंपनी की तरफ चलते हैं. वन लास्ट कंपनी विच वी वांट टू टॉक अबाउट, एंड दिस इज समथिंग विच विल टेक टाइम. Also, we are in a slight hurry to finish this space today because 10 बजे से यूनाइटेड का गेम है, यूनाइटेड वर्सेस सिटी, मैनचेस्टर डार्बी. So I definitely want to go and watch the derby as well. But yeah, so talking about Yash High Voltage, the company specializes in manufacturing and distributing a wide range of transformer bushings. The company's manufacturing unit is situated in Vadodara, Gujarat, and has an annual production capacity of 7,000 bushings, 3,000 OIP bushings, 3,000 RIP bushings, and 300 high current bushings. In terms of the IPO details, the company is coming up with an IPO of 110 CR, out of which 93.5 CR is a fresh issue. And it is coming at a market cap of 417 crores. अगर मैं फाइनेंशियल्स की बात करूं तो कंपनी का रेवेन्यू है 109 करोड़ इन FY24 और उनने पैट किया है 12 करोड़ का. सो दैट वे कंपनी जो है वो 33-34 पीई पे आ रही है, विच सीम्स स्लाइटली एक्सपेंसिव स्पेशली फॉर एसएमई सेगमेंट. ऑल्दो टीएनडी है, बट एसएमई सेगमेंट के हिसाब से द पीई एटलीस्ट एट अ वेरी हाई लेवल सीम्स स्लाइटली ऑन द हायर साइड. In terms of the LM for the company is Indo-Orient Financial Services. So with that, maybe I will move it over to Rohit. Rohit, do you want to go ahead and talk about the Yash High Voltage?
Thanks, Manish. So yes, this is a very, very interesting company, a company I like quite a bit. So I'll give you my quick read on this, and then we can discuss what the listing might have to hold for a company like this. So what they do is they're basically a vertically integrated pure play bushings manufacturer. Bushing is a very key component. It's a critical component in a transformer. Up to half of all transformer failure is due to bushing malfunctioning. So it's very, very critical. So what is it that a bushing does? So basically where you have the power lines, right, where that connects with a transformer, whether it's a step up or a step down transformer, that point of connection, the transformer ultimately is a metal box, and the current is flowing through these wires, and these wires have to enter the transformer, right, the body of the transformer. When it has to enter, these currents are so high, right? These are like 300, 200, whatever, 400, 700 kilovolt, at 765,000, volts of electricity. That very high electricity causes, well, in general, electricity causes electric fields. Very high, current will cause very high electric fields. And that, when it connects with the metal casing of a transformer, can cause the current and this electric field that is generated to cause current to flow through the body of the transformer and into the ground. And that is effectively like a short circuit. And if this happens, this can cause, well, basically the transformer to fail, can cause explosions, can cause fires, whatever, all of those kind of things that you might have seen or heard when a transformer fails. The bushing is that core component that make sure this doesn't happen, because it is at that point of connection between the wiring and the body of the transformer, and it ensures that this electric field is contained. So that is the role of the bushing, and why it is so critical, and why it is a very, very difficult business to get into. This business, so what Yash High Voltage does is they currently make three types of bushings: OIP, RIP, and high current bushings. OIP is an oil impregnated paper. Basically, you can think of it as the insulation is oil. In RIP, the insulation is a kind of resin. And then there's the third, which is high current bushing, very, very small part of their business. RIP is considered to be the future of the bushing industry. Basically, it is more solid base. There's no leakage. It's more environment friendly. And that makes up today majority of what Yash High Voltage makes in revenue. Also about 80-82% of their revenue is this segment. In the market today, most bushings are made by horizontal transformer players. So Hitachi, Siemens, CG, Voltamp, etc. They make the bushings that they need for their own consumption, and they may also sell. Some of them also sell bushings, but it's a very small part of it. It might be like 1%, 2% of their business. In that way, Yash is pretty unique, both in India and globally, because it is vertically focused and it is able to make or custom make solutions, based on the client and the exact client need. And they're also very fast to make those solutions, because again, this is their core business day in and day out. If somebody goes to Hitachi and it's 1% of the business, they're not going to care so much. Whereas for Yash, it's 100% of the business. So this is where, they are constantly innovating and constantly able to sort of come to market with faster solutions. That is the reason why somebody like a Yash should exist. This is, like I mentioned, a business with a very high entry barrier. It can take 24 to 36 months for a new vendor to pass, all the rigorous checks of the client. Sometimes you actually need the checks of the final user, whether it's a power grid or, any of these power companies. So it's a very difficult very high moat business as far as I'm concerned. This company, interestingly, had come with an IPO in 2018. So they filed a DRHP. But at the same time, a Swiss bushings manufacturer called Moser Glaser, they actually invested in this company instead. And this was a very good decision, at least from what I can understand, for Yash High Voltage as well, because it helped them gain a far more technical understanding and sort of capability. The promoters actually bought out Moser Glaser earlier in this year, in April of 2024. Back in 2017, when Yash had come for the IPO, they were doing like 12 crore in top line. This last year they've done 110 and they should do 120, 130 crore this year. So they have 10x in the last 7 years, which is excellent. So it's good, good for the business, good for the promoters, good for the company, and sort of shown that the company has sort of scaled very nicely in the last 6-7 years. Today, as I mentioned, in FY24, they did 110 crore in top line. They'll probably do 120, 125 crore this year at maybe 13 and a half crore PAT, which is not going to be huge growth. That's mostly because they are capacity constrained. Today, they can make 7,000 bushings a year. Their biggest categories is RIP bushing, which is 3,000 bushings a year. That makes up 80-85% of the revenue, and that they are at pretty much 100% capacity. So they cannot grow unless they increase capacity. Before I talk about that, just one more point is the balance sheet is probably amongst the best you will find in the SME segment. Very, very strong conversion of EBITDA and PAT to cash flow. You really will struggle to find any red flags in their balance sheet. I've noticed this to be a slightly common theme across this whole transformer and power segment, because demand is so high and supply is so low that vendors are able to sort of set the terms. But that's good, right? Like ultimately, this is the kind of business that you want to invest in. So coming to the capacity themselves. So they are raising 110 crore, of which 70 odd crore is for land and machinery. They've actually, along with that, they're working with this Affinitas, I'm forgetting the Affinitas, I think, a Swiss consulting firm, to actually help them set up this and spend the 70 crore to get them the capabilities that they need. The end goal, as I understand it, is to make the core of this RIP bushing, the core itself in-house. Today, most of that is imported, and you sort of import the core and then you assemble everything else together, test it, and then you finally sell it. They want to actually make the core itself and reduce the dependency on, basically importing this, which is again shows that the promoters are thinking big, and, it becomes more and more challenging for anyone else to compete with them as they do this. One interesting thing is I did see that in their balance sheet, there is a 9 crore CWIP, that's capital work in progress. They currently have around 18 crore of, plant, property and equipment. They're adding another 9 crore. So I'm trying to figure out, and maybe I'll try and post it by tomorrow if I get to know exactly the outcome of this and what this is going to be used for, and if there's a shorter timeline, because this implies that there may be some capacity before this 110, the IPO funds get used for new capacity. There could be some short-term increase in capacity as well, which suggests another 40-50% upside if that is correct. The new capacity of 70 crore, one can assume, okay, there is no exact number in the RFP, but one can assume that they can at least 3 to 4x their top line, once that new capacity is. It's not like they'll do that immediately, but as they fill up that, whatever capacity that they've created, they can at least go from 100 to 400, 500 crore is my sense, just back of the envelope calculation. The business is coming at a 33p, which again doesn't look cheap, but to be honest, most businesses come in at, like good businesses in the segment come in at 15, 20p and eventually get to 40, 50p. So it just so happens that this one is already coming at 33p. So I still think it's cheaper than what the market would value it for sure. It is a one of a kind player in a very hot segment. Transformer value chain businesses like for example, JB and Villas were both recent listings. JB trades at 35, 36 times. Villas trades at 46, 47 times. Transformer companies, the core transformer manufacturer, like Danish listed recently, that's at 60 times. So, the segment does get a trade at a premium, partly because of the quality of the company's balance sheet, partly because the, runway for growth is huge, at least for the next, actually 5 to 7 years. So, overall, 33 actually is not expensive in my view. Now it's a question of where it will list. I'll come to that. The other small fact is very, very strong pre-IPO and anchors. So there's this new fund, Monarch, which was also an anchor in IGI, which is this International Gemological Institute, 4,000 crore IPO. They were the largest, fund. I think they've taken 40% of the anchor here. Negen, again, a very, very good investor. They have a sizable chunk in pre-IPO and have taken the second largest portion in the anchor. We've seen the promoters of Polycab, promoters of Voltamp are both in the pre-IPO. So overall, this is just, to me, it looks like there's a lot of long-term investors who are coming into this company. This is not going to be the typical flipper kind of company where people come in and exit in 1 month, 3 months. That's my sense. I am personally very bullish at IPO price. And even if this lists at 35%, I still feel there is value on the table. This is not typical for the people who want to just take 5% and sort of exit in 3, 4, 5 days with some listing gain. I think the business is a very, very strong high mode business. The market will give it a disproportionately high value, I feel. Whether that'll be 50, 60, 70p, I have no idea. Some of these other sort of niche power players in the main board trade at 100, 120, all sorts of crazy multiples. But I personally feel okay till, it reaches that 45, 50p. That looks like there's a factor of safety built in beyond. Like if this lists at 90%, I will not add it. But if this can list in that 30, 35% range, then it definitely looks interesting for anyone who wants to play the segment and has a long-term outlook.
Got it. One question, Rohit, you mentioned that 85% of revenue is from RIP but I read that they had 3,000 3,000 capacity each, right? So does that
revenue.
Is there that high of a difference?
Yes. 82% comes from RIP. Only 13% or something comes from OIP.
Got it. And you're saying that other players probably can't get that capacity because they'll have to get the certifications, etc., which is a big ask.
Yeah, see, there are no new players. I mean, there may be some smaller players who service the really low-end distribution type transformers, but there's nobody who services power transformers, which is the segment that these guys operate in, which is where I'd say the real moat is. And they are also increasing their capacity regularly. When I say capacity, the rating capacity that they can sort of service. So what they're doing has been built, I would say, over many, many years. So it's very difficult for someone new to come in and catch up with them. It takes time. These are types of businesses where just time in market is a moat and is sort of valuable. And they've also done a lot of things, right? Like they've gone and tied up with, say, the Moser Glacier thing. I think that was a brilliant move 6, 7 years ago, just because it again pushes their understanding to a global level rather than just what, say, the rest of the country is doing. If they need to compete with a Hitachi or a Siemens, they do need to step up their own learning and their own capabilities, which is what they did back then. Even now, if you look at how they're setting up the new plant, they're not doing it themselves. They're investing by getting international consultants to help design the plant for them and design the processes and so on. So I think they're building this company very, very well. And my sense is from someone has the patience, for FY27, by FY27, this company should be in a different trajectory and market will value this richly is what I feel.
Got it. A couple more questions from my end, Rohit. So one, are they also planning to do backward integration where they are planning to get the raw material built itself? Because I was listening to one of the LM calls where the LM had mentioned that the cost may be too high for the future as well, and they're planning to do something where they are planning to build the material in-house as. And second question is, what is the what do you feel would be the projected growth? I have heard a few questions with respect to growth that the capex would be delayed. So how delayed would the capex be? Would that be an impact, especially for, let's say, people who like to, not hold companies for a slightly longer period, if I may say so?
So, I mean, I think I also kind of covered this. This is definitely for people who have a sort of long-term view on and not very in a rush to sort of sell this thinking they can trade this company. I don't know. It may happen that it gets a very high multiple upfront and then it sort of stabilizes. But I do think this is meant for people who want to invest for the long term only. So what they are doing is they are creating, like I mentioned, right? The RIP core is one of the components that gets manufactured internationally and gets imported. And that makes up the largest chunk, I think, of their raw material as well. And that is the bit that they want to manufacture in-house with this plant. So they are trying to go away from just sourcing the core element to making that core element. And that is a sense I could get by looking at the machines that they are, that they have ordered as part, or that they've put in the objects of the offer in the RHP. It looks like they're doing this to actually build that core in-house. So I hope that answers that first question. Your second question was the growth, right? So my sense is this year, I mean, probably the year is almost done. Probably they'll do again 120, 125. So not a big jump over last year. If that CWIP, if my read of the CWIP is right, then they should have some more capacity, maybe 30, 40, 50% more capacity for next year. So maybe one can expect another 20, 25% growth in FY26. This capacity that they're setting up, I think they're also very clear. This will only come in FY27, which is sometime in March, April, FY 2026 is when this capacity will go live. Once it goes live, again, my sense is it should quadruple their total available capacity. And that can, of course, as they utilize it, their revenue will grow. But don't expect anything great in terms of revenue growth in FY25 and some moderate growth in FY26 with the real jump happening in FY27.
Got it. You covered it pretty well. That kind of covers my question. One last thing. And again, this is probably a question for a lot of people. And you were not there for the IKS review yesterday, but if you had to choose, because a lot of people applied in Sai, and like by a lot of people, me, do I go in Yash or do I go in IKS? I'm more like, I was more inclined towards Yash, but I know that Yash would be pretty like heavily subscribed versus the IKS. So, like, what are you planning to do yourself? I'm still confused between the two, so I'm just trying to clear that confusion.
So I have the same problem. I also ended up going full force in Sai at the last minute. So my funds are also somewhat lesser. Mathematically speaking, it is better to go to IKS because an IKS, just given the amount of money that is blocked on Friday, IKS will not be more than 7x in BHNI is my sense. So if you're someone who applies BHNI, a 10 lakh application, per application will give you a 1/7 chance of getting, 2 lakh application. Now, I don't know exactly what it lists at. If you just go by GMP and say it lists at 20 to 30%, that is 50, 60K. So your mathematical probability of making money is pretty high in IKS. Whereas Yash, all of that 4,000 crore that went to Jungle Camp and tossed the coin, that will come to Yash, and that itself means it'll be 300x. So your return will be lower. So I still feel it's better to apply for IKS first, and whatever funds are left, put it in, like just distribute it across Yash in the best sort of maximum way possible. That is what it feels like right now. If the Yash numbers are lower than expected, just because of the amount of money that is blocked, I still feel it won't. I still feel that Yash will get to 250, 300x minimum. But in case it doesn't, then one can consider shifting to Yash over IKS and maybe do SHNI or something in IKS. But intuitively to me right now, it feels like IKS, BHNI, if one goes with 20, 30% gain in IKS, that is definitely mathematically better.
Got it. I have made my decision. I'll apply for Yash. I'll put IKS retail because again, the review yesterday, IKS, we were not super positive in terms of how the EBITDA margins will sustain. I want to hold this stock, so I'm hoping that I'll be able to get at least one retail dog. But yeah, I'm like hoping that I get it. But yeah, that is what our review was. Anything else that you, Rohit, have to add on any of the issues?
Nothing else. I think you guys have spoken about IGI and I did listen to both the reviews earlier in the morning today. So I think enough has been said about IGI, said about IKS also. So nothing specifically to add.
Anything,
Also, I'm quite
anything that you want to add on Vishal, Sai, and MobiKwik in terms of the listing percent? Where do you think they list? How should people look at that percent?
I mean, I'm getting increasingly bullish on Sai. I think Tanmay had covered it very well in his tweet also. And I think many people saw it. Many people followed some of us also and got to know that we were going full force. So hopefully more people have applied for it. It does look like, 10% is looking very, very likely now. Maybe 15, 20% also. Who knows? The more the merrier, given everyone's going to get firm allotment. Anyone who's applied BSN at least is getting firm allotment. So nothing more to add. I think it's one of those segments which are hard to value. In a sense, it's a little bit like Yash. very unique business. Can't say there is an exact peer. And some of these companies, you look at it as 40p, you look at it as 50p, you might look at it as 70. They are all high numbers. So what is the difference between 70p and an 80p company or a 90p? But one is like 30% higher than the other. So it's very difficult to say exactly where the market will take some of these things. So best is to try and get into unique businesses early as possible, and let the market take it to where it takes it, rather than putting, oh, this is the right multiple, 40 is the right multiple, 50 is the right multiple, or the CV EBITDA is right. If you've got a unique company which is differentiated, has very few global comparables, and I'd say both Sai and Yash are obviously very different sizes, but they're both in that mold. And market can do all sorts of things with such companies. Like a very random point, you've seen this United Heat Exchanger, where that company is in terms, you can never guess that company will get a 60, 70p, all because another peer has got an even higher multiple, which again is ridiculous, but the market is sort of pricing in 3-4 years of growth for that company. So you never know where the market will take this. You get inside early and then just shut shop and don't do anything. This company will do well. Whether to enter at 60p to go to 90p, you'll never have the comfort. But if you're at 35p or 50p, you might just say, okay, 60p can go to 90p, very good. You have a lot of margin of safety built in. So that's what I feel for some of these companies. All the analysis we do, it's impossible to arrive at a P multiple or a number. Just put a factor of safety for yourself, and then after that, the market can do whatever.
Got it. Maybe with that, we can wrap up the space. I just want to say that I'm manifesting for Yash High Voltage allotment and if I get it. I hope you also get it. But
Fingers
we can
crossed.
end the space this week, for this weekend, and then we'll be back. Next week is going to be very tricky. There are like I have lost count of how many IPOs, main board IPOs are there. I think 6 or 7. But yeah, next week is going to be very difficult. We'll see how we want to do that space. Maybe we'll divide the next week as well in two parts and do part one and part two. But yeah, do follow Rohit, Yash, Tanmay and me and the YouTube channel. If you haven't followed the YouTube channel, the link is in the pinned comments. Go ahead and listen to IGI, IKS and Hams Bio, and I will put this space as well probably the next couple of hours on YouTube, and you can listen to that as well. Thank you so much, guys, everyone, for joining. Have a good day.
Thank you.